Friends, good morning. Thank you very much for being with us today. Thank you for participating. I think that the topic of the transformation of the financial sector using both technologies of AI and blockchain is, has been on the agenda for the last 5 years, and I think will remain on the agenda for the next 5 or even 10 years, because really in finances there are a lot of outdated things that has been with us for a while now. I think the most outdated thing is that the information and the liquidity in the financial sector, they do not move together. They do not move together as tokens. As when there is a payment and settlement, there is one system that sends information about a settlement and a transaction, and other systems that regulate liquidity, and all of that is spread through time. It's not done at the same time, it's synchronously, and obviously that means delays for the participants of the financial markets. And blockchain technology might be able to resolve that challenge. We have a very interesting panel today. We have someone from the regulation. Our regulator in the last 18 months made a major leap forward. The regulator went through a phase of acknowledging the technologies and the real applications of these technologies, and we have a major progress here, because if in 2021 when there was a law adopted, 259 on the digital financial assets, it just opened the door for tokenization and for the first issues for the participants of the market. And last year and this year, the regulation has gone a long way forward. And today we're going to talk about the further regulation opportunities. Financial sector, Sergey, Sber, thank you for being with us on the panel. What are the practical tools and use cases? And going to stop us, of course, is going to give us some international experience, how to make sure that we go through this tokenization path, the transformation of the financial sector path, as quickly as possible and as efficiently as possible. Maybe we can address some of the mistakes and not commit some of the mistakes that other countries made. Now, a couple of figures. The tokenization process is pretty impressive. The BCG journal says that the tokenization market will increase to $19 trillion in 2033. In 2025, it was around 600 billion. And in September this year, there was an ingenious act that was adopted that regulates the stablecoin market in the US. Before the stablecoin, the attitude of the key regulator was not fully determined, and now it is determined. The stance of the regulator is determined, and there is a support. And it's a major leap forward, because one of the key regulators of the international financial market has approved USDT, the stablecoin, and the market cap of stablecoin went higher than the $307 billion. At the same time, the other stable coins are getting more popular. Other countries are talking about the launches of similar instruments, and our neighbors, Kazakhstan, in autumn of this year launched, not an experiment really, but they launched the instrument, and Citigroup forecasts that in 2030, in the basic scenario, the volume of the market of stablecoin will reach 2 trillion rubles. In Russia, our market has opened up to the digital financial assets thanks to the adoption of the law in the first platforms that were registered in 2023. And now we have 18 operators of information systems that are working on the market. And in 2025, in 11 months, the the overall volume of the market was almost 1 trillion rubles, and in 3 years it increased to 1.5 trillion rubles. Now, given the overall market, it's not maybe such a great amount. Usually the instruments that are delivered are short-term instruments for 1-month loans. But there is a trend. Russia is playing an active role in the financial markets in the last couple of years. Our country has become one of the largest countries in Bitcoin mining. Around 16% of the global hash rate is accounted for by Russia. And even in Sberbank, we have approved an industry of mining. Before we were mining gold and metals, and now we are having the credit strategy for the digital mining. We can forecast the money flows, we understand what is halving and other instruments, and we can finance the appearance of new companies that are engaged in mining, really in mining of this instrument. And what is happening population-wide? We made a survey. 83% of Russians know what is cryptocurrency. 43% would like to have a secure crypto wallet that would be user-friendly as well. So basically that's very important because people want the financial infrastructure to be in place, to have a broker that will give access to the cryptocurrency, and they should not be worried that next time when they log in the cryptocurrency app, they will be banned from using it, and and your assets are just gone somewhere. And today's panel, we are going to talk about the future developments, not just to exchange opinions. So I would like to start with Kirill in the first question for you. In 2025, the digital financial foreign instruments were allowed to be used. What made the government to allow that? How did the market react to this new innovation? Kirill, how are you going to comment on that, and what are the newest plans in this area? Thank you. Good afternoon, friends. Thank you for the question, Anatoly. The first thing that I would like to focus on is that this year, the digital asset market in Russia achieved 1.5 trillion rubles. This year, we raised 1.1 trillion rubles using digital assets, if you be more precise. So the market is pretty significant, and we have issued around 14% of the digital assets of the overall volume of the funds that were on the securities market. So that means that the regulator is playing a more important part here. This is an instrument for short-term lending. So this instrument has become a nice addition to the bond market. Now, the integration of our market with the international market and how to give access to the international assets on our market. Let's think back 5-7 years ago. What was the international market of virtual assets? Bitcoin, Ethereum, and a couple of other stable coins that people still know about, and they have a largest market cap. Now, what is the trend that we are seeing in the last 2-3 years? It is very seen. It is all the regulators of the developed and developing countries are paving the way to make sure that virtual assets can be issued based on the regulations, preset regulations. The market of the digital assets is growing, and obviously financial regulators cannot allow such a big segment that has become a part of the financial segment to be unregulated. I mean, regulators have to step in. And we see the trend that tells that more and more digital assets are going to be produced in line with the regulatory rules. These are the regulated assets, but they are processed in open blockchain systems where it's not regulation that rules, but algorithms. So increasingly more often we're going to see that digital assets are being produced that are in line with the regulation. They have to comply with the regulations on the quality of the provisions, on the disclosure of information and the audit regulations. They have to comply with all of that, and these assets are more transparent to the regulators and to the players. And I think there's more trust to these assets rather than the cryptocurrency. Cryptocurrency is still frowned upon by regulators, and last year we allowed the international digital assets to be entered in the Russian market, and we have seen the first foreign digital assets that appear on the Russian market, that has appeared on the Russian market during this year. And we understand that the international market is a two-way road, two-lane street. So we made the conditions to make sure that the Russian assets can also be traded in the international markets, and so that they can be traded there. We gave the opportunity to do that. Unfortunately, we do not see much activity from the participants of the market. They do not want to move to the open networks the assets that are created in Russia. Why is it happening like that? I don't know. For now, maybe we need to fine-tune the regulation. Maybe the participants are still test driving their technologies. Maybe together with the banks and the entire community, we need to think about how to not only make sure that the digital assets can be put to open blockchain, but maybe we can issue them in open networks. It will help to drive down the operational expenses. It will drive down the cybersecurity risks, because we won't need to build the bridge. We'll need the certification mechanism, because right now the platform of digital financial assets are being accredited and registered by the Bank of Russia. So it's kind of a contradiction really here, no? It's not a certification mechanism that we need to talk about, I think. Today, we have made a couple of requirements to the operators of the information systems, and when these operators give access to the issuers in this market, that they make sure that the quality of the issue is proper, and the operators might have more responsibility and accountability, so that they cover the risks of investors with their capital. If a token was opened, issued on their platform, and this token was not issued in line with the regulation, they have to be accountable for that. Now, putting the digital assets in open platforms, that means that the operators will have a new role. They will become tokenizers and be operating in open blockchains, and they will be more understandable to the international players, but they will have to be responsible for smart contracts. They need to make sure that they are in line with our regulation, Russian regulation, and so this is a new role, a new function of the issuer that might appear. Do we need it? And what will be the requirements to our platforms? These are the two questions to answer. Thank you, Kirill. Question to Sergey Khotimskiy. Sergey, you are working in this area. What are financial digital assets for you? What instruments the bank is using, and what is the outlook for the next 2-3 years? I'm talking about the everyday work with your customers. What customers might want? What do you feel is the sentiment of the customers, and what would be relevant in the blockchain technologies and the financial digital assets in the next couple of years? Well, first of all, thank you very much for inviting me here. I would like to thank all of the participants for being here today. We are resolving the tasks that arise before the customer. So if you talk about the Russian financial assets, digital assets, first of all, we're talking about the short-term lending instruments, and there is an intersection of the regulatory and market requirements and needs. And at this intersection, the kind of new market appeared. It's pretty efficient with the low costs. We decided to go not in line with our competitors. We have decided to give the opportunity to our customers, whatever issue, whatever assets, they can use their same customer journey. Because, I mean, for them, it's a pretty pretty good when the fixed income is in one report, yes, it's like one window, yes. And in this sense, we are using the capabilities of all the other players. We work with some players more actively, with others less actively. But anyway, I think that this is a pretty a good task for the bank working on buy sides. As for the sales side, we are working with largest corporations, with medium and even small businesses. We're showing all the advantages that there are in terms of the speed of entering the market, of the freedom. Some of the conditions are more kind of free if you compare them to the bonds and even with the commercial bonds. So yes, the market has been formed. It's going to grow. It depends on how the related markets will develop, because if the bond market are still very much regulated, the situation will be one, and the other situation will be when the bond market will be less regulated. Anyway, the platforms, there might be some great developments here, because if you look at Russian assets, one of the big limitations in terms of the shares market, equity market, we are cut from the international investors right now, because all of the intermediaries, they do not get anything from the assets, from these assets, and there are these huge risks. And if you talk about the friendly countries, and especially non-friendly countries, no one can give you access to Russian assets and put in shares, bonds on our platforms, or digital financial instruments where we want to get international investments. And here we work closely with the leaders of the leadership of the regulators and the stock markets. It will open up huge capabilities for international investors to invest in our country. And now they cannot do that because there is a lot of intermediaries, and it just doesn't work. You cannot just properly invest in the Russian economy in that way. If there is a huge demand for some financial instruments, so it might be a revolution, but it can put us back, because the cross-border movement of the assets, it used to be free. Then there were customs, then there were capital controls, and it was growing and developing. If we take stable coins, for example, there is a Medici Bank in Italy, they just took gold and they just put gold and they just hold it and, were writing some papers. Anyway, why the regulation appeared? Well, because, they said that there will be some liquidity assets, and there are credit risks, operational risks, and you have to regulate that. And this regulation and deregulation is happening all the time to ensure the balance. And another topic is AI, a big topic right now. It creates a cross-border movement of data with no customs barriers, and the conditions are totally different. So what is happening? On the one hand, the risks related to the system are growing. On the other hand, you can use the legislation to regulate the crypto assets. Regulators cannot liberalize everything, because crypto assets can be used in criminal purposes. Digital assets are used quite intensely by the criminals. We're talking about cryptocurrencies, not the digital financial assets. Well, yes, but stable coins are used by criminals as well, in a broader sense. Our Russian digital assets are not used because of the limitations, but international ones, yes, that's true.
Still, what do we see? We see that we are more open to our neighboring countries that are friendly countries, and also because they have with us all kinds of agreements that liberalize our financial relations, and we see that their development is rather rapid. Belarus, Uzbekistan, Kazakhstan, they're very rapidly developing, and our clients in one way or another, they start tapping into this potential. They start taking advantage of opportunities in these countries. They are very much linked, obviously, to our financial system, to our ruble. So what we see as our job is to give proper, high-quality recommendations to our clients, what they can use to fulfill their needs. And also, we need to cut off these illegal flows that can go from our fiat system to cryptocurrencies outside with some violations. So the faster we introduce some clear-cut regulation, the faster we build our sovereign clear system of what we can do or we cannot do, the better we will be following our own path rather than the path that regulators of other countries are opening up for us, neighboring or not neighboring. So we will be depending on the regulator, clearly, and with all the practical solutions, we will be implementing those. For now, we are giving guidance, recommendations, and advising on the instruments of neighboring countries. Thank you, Sergey. Let's hear from our foreign expert. What are the trends in the global market? Günther, a question for you. The global community has been introducing stablecoins very actively, and today the most widespread stablecoins are backed by traditional currencies, fiat currencies, or sovereign debt, such as US treasuries and others. Is it possible that they will become the foundation, the future foundation for the global financial system? Or does the future belong to stable coins backed by physical assets, such as gold or some other material assets? What is the strategy to the use of these tools? Is the strategy that your company uses?
Well, thank you very much, Anatoly, and it's a great pleasure to be here back in Moscow. It's been a few years that last time I visited, and my last time I was working for Citibank as the regional manager, including Russia. Maybe some of my colleagues are in the room right now. It was a real pleasure at the time, and Russia was one of the biggest custody markets for Citibank, and of course, unfortunately, then the business had to be reduced. Last year, I left Citibank and I established Manifest Executive Consultancy in Dubai. I'm actually based in Dubai for the last 5 years. And with the UAE and the Dubai financial ecosystem and fintech ecosystem, I actually happen to be very much involved with the blockchain, digital assets, and AI. And when I established Manifest Executive Consultancy, the main idea was to bridge in between the traditional financial system and the digital financial system, because there was also a big divide, which I am actually seeing here, which I was witnessing from the distance with the Russian technology, Russian experts, also very much in number in Dubai. What I experience here is the level of development, both in the previous session as well as so far listening to you. And also to your point originally, Anatoly, where we think Russia stands is also very important. I think with also the regulator here in the panel, obviously the regulator's role is very important. But often regulators are not necessarily leading the whole wagon, right? It is the fintechs, it is the banks who are actually strong in fintech, this leading being the powerhouse. Coming back to your question with regards to stable coins, obviously they are picking up. Right now, the overall tokenized assets in the world is at around $300 billion. Out of that, 270 billion is stable coins, and $30 billion is tokenized assets, real world assets. So stable coins, in my view, is key. And for me, stable coins that are based on real currency, like backed by the real currency, is a very important component of financial rails and financial transactions to happen over blockchain. Because in my advisory role, I'm affiliated and advising a number of fintechs who are in the tokenization of real-world assets business. What I see, tokenizing an asset, bringing it on chain, doesn't necessarily provide the financial means if you cannot also settle on chain. And when we talk about cryptocurrencies, this has been mostly for the retail clients. And the roller coaster nature of the cryptocurrencies have also been a backdrop for the institutional access or institutional interest looking into this. Now regulators and regulations are forming around the world, and the institutional demand is forming on these assets, provides the landscape, and the technology is there. Tokenization of real-world assets is happening, but for all these to really leap and to go to the tipping point, in my view, stablecoins has a very important element, is a very important element and has a very important role. So stablecoin based on gold might be an asset to be invested in, but a stablecoin on the dollar, on the ruble, on Turkish lira, on the UAE dirham is very important for the financial rails, for the payments and settlement of the assets. So that, I believe, also enhances the ability of the regulator to the extent that they regulate the stable coins, because then the settlements of the tokenized assets would be more efficient, will be more transparent, and will be more traceable. So that is one, the stable coins and their regulation. Tokenized real world assets regulation is another to actually form this up. But whatever you have achieved so far, the tokenization of the financial instruments is a great leap, and I think that also pulls the whole system, providing a benchmark. So that's how I see from the distance.
Thank you so much for these observations. I think this trend is definitely one of the key trends for Russia. And based on that, I have a question for Kirill, for the regulator. Does the regulator have any plans to launch Russian stablecoins based on the ruble? What Mr. Graf said in his presentation, will it be possible to make settlements in the market with such instruments, with such stablecoins? What is the view of the regulator? Because we see that the global market is shifting in that direction, and there is big promise, big potential in this area. What do you think? I think when we talk about stablecoins, we talk about one of the many examples of tokenization of money. I touched upon this when I answered your first question, but I will reiterate. At some point, we gave the opportunity to not just issue digital assets to the corporates, to the banks. We gave the opportunity to use them to venture into open chains. The practice is still developing, but can a credit organization these days issue a debt instrument by way of DFI based on, say, precious metals? Yes, they can. Can they design the instrument to make it look like a stable coin and be used for transactions in an open chain? Yes, they can. If we look at regulations in certain jurisdictions, in the UAE, for example, with regard to stablecoin, they have certain terms and conditions to define what is a stablecoin, how we can use stablecoins for settlements, among other things. And the regulations say that, for example, stablecoins should not have any built-in fees and charges. In our case, this instrument is developing as a market for corporate debt primarily. In order to have stable coins, we need an instrument with a slightly different design. We need it to be clear to international investors. Why these instruments still haven't gained momentum, I think the market should answer. My hypothesis, I said it when I answered the previous question. I think we should issue this straight away in open chains. Regulatory speaking, it's still with a question mark whether we go there or not. But I would also like to say a few words about tokenization in general. We talked about the tokenization of money, and we often say that the tokenization market is going to grow very rapidly, trillions and trillions of dollars potentially, and I think we should be prepared for it, and we should define tokenization correctly. Why do we need tokenization? Often we understand tokenization as a possibility to use a tokenized form of something that exists in the real world, like a precious metal. You can tokenize precious metals, securities. There are attempts to tokenize real estate, but very importantly, when we talk about tokenization, we always need to keep in mind that any tokenized asset must be stored with a custodian. You need to keep it secure, because otherwise the token is passed from one owner to another and the asset lives its own life, which sounds a bit absurd. The custodian institute these days for tokenization is lacking, is missing. So the question is, do we need this institute, this organization, this entity as such, to tokenize the assets, to keep them secure, to store them? What are the easiest things to tokenize? Securities. They are stored with depositories. You can tokenize them easily with precious metals, also very clear, stored with banks. You can issue tokens based on them. There is a system that allows obtaining information on where it is stored. With real estate, it's a bit more complicated than that. You can try to tokenize real estate as well, and we know that some countries are making attempts in this regard. But let's imagine you are issuing a token on an office building. You buy tokens, 100,000 investors. What next? How do you manage a real estate facility? That's a big question. Paying taxes, getting lease payments. This all complicates the system. Mutual funds, I think that's the solution. Yes, Anatoly, I agree, but then maybe we need to tokenize mutual funds rather than real estate. And also the tokenization of stake in companies. We as bankers often accept as collateral a stake in a company. As for recovery of such stakes, that's a complicated process. If such stakes were circulating in a DFI platform, maybe they could make it easier. But then stakes in different companies are different for different purposes. For an LLC, it's for a smaller company with maybe a smaller turnover. And speaking of the international practice of tokenization, I like this example with the Swiss bank, the UBS Group. In 2023, they launched the first pilot case with tokenization of assets. They tokenized a fund and created a platform for tokenization, but they are tokenizing financial instruments that are regulated, shares, bonds, in order to give access to liquidity, the cross-border market. As for tokenization of shares within the country, what's the point? Shares are already circulated digitally. These are not some documents on paper that we hand over to other people. As for tokenization of this market, I think the main benefit is that, in theory, we can gain access to the international market. The tokenization of real estate, I think I've covered that. It's more about questions than answers for now. And another important point, for any circulated asset, in stock exchange, open blockchain, it's good when you have clear, transparent rules for the issuance and circulation of this asset, because when your process is standardized, it gives the investor some clarity and the issuer some clarity on how to transact with these assets, and this reduces cost. Let's look at what the domestic market of digital assets look. 18 platforms, 18 operators, that's good. We have made progress, 1.5 trillion of turnover, but they all differ from each other in terms of the logic of circulation of digital assets and accounting logic on this or that platform. I think this is where we have room for improvement in terms of standardizing the rules of circulation of digital assets on platforms. This will give additional opportunities for tokenization, interoperability and fragmentation of the market, another topic that is very much debated. We have 18 platforms that are silos, essentially, isolated, standalone. Perhaps we will need rules that will mandate platforms to give this opportunity to transfer tokens between platforms. And this brings us back to the question of blockchain platforms with higher interoperability. Sergey, what is your opinion on stablecoins? Do you think that clients have a demand for it? And is there an understanding of how to use this instrument? Since 2022, we have observed a clear growth of interest among clients and corporates. International settlements, right? Yes, for international settlements primarily. There, the interest in stablecoins is the highest. USDT currently helps reduce regulatory barriers in certain countries. It has its own pros, especially given the Russian context and the restrictions from unfriendly nations towards Russia. And it has its own risks because somewhere our measures of capital control have certain vulnerabilities. But still, we understand that there are risks that cannot be ignored. They have to be mitigated very actively. And in that sense, I am sure that the roadmap of the regulator should level out certain things that have emerged quite rapidly without cutting off the market for businesses and for people. But it's just about leveling up the landscape. Stablecoin may become a means of payment for drugs or for weapons. Obviously, we do not want that. But still saying that because of those risks, we need to build a wall. I think the consensus opinion is that there is a certain point that we need to reach. We need to reach a point where stablecoin evolves sufficiently. We will need to work with international stablecoins as well. A Russian stablecoin is an absolute must-have, I think. This rigid policy of the regulator towards the high key rate might become one of the advantages in the competition of Russian stablecoins in the global market. Because when certain regulations are limiting interest payments in stablecoin mode, it also has to do with the fact that with the lower rates for other currencies, it can create some headaches, but we live in a context of real interest rate and can become an advantage in terms of distribution of our assets in international markets. It's just that we need to assume this active position as fast as possible and liberalize things that we can liberalize. And I believe that next year will be a year of preparation, and I really think that ruble-based stablecoins can gain their share in the international market, maybe an even larger one than we have in mining. My 2 cents as well, we gave the opportunity to issue tokens in open chains. We also gave the opportunity to use them for settlements. You can pay using digital assets, Russian digital assets. You can use them for settlements outside of Russia for international payments. We have created all the necessary regulation for it, including FX control and AML/FT regulations, but the instrument has been evolving very, very slowly.
At the same time, my second message is that we will not be ready, and we are not ready to give the opportunity to use stablecoin and digital assets as a payment method in Russia. I think that our payment environment in Russia is very much developed, and now you can pay online. Maybe we should debate on that. I'll give you a couple of examples. 2020, COVID, just 5 years ago. Back then, there were various special security payments to the families with many children and other things. Some social benefits. What this money was spent on? If you talk about the traceability and certificate, it's like stablecoin. I mean, given the limitations that could have been set for the spending. So if the money is sent for buying medications, you cannot buy cigarettes with them, and more like banking support. There's a product when there's a contract, there's a very long chain of suppliers, and right now the company that is doing the contract has to go to the bank to make sure that they trace the money, the funds across all the entire chain. That's the bank monitoring service, but blockchain and stablecoin technologies with some smart contracts can ease the use of these instruments and remove the human labor. That's the most important thing, and to speed it up, because when we talk about banking monitoring service, that means a long time. Every payment is going to be looked and monitored by the bank for 3 days, and that's a long way to go. I love blockchain and smart contracts, but right now the funds, cash are in automated systems, and in any banking system you can see what it was spent on. And if you do the internal analytics with AI that we're talking about a lot today, on the other hand, are we ready to implement the control of the spending in the banking system? So do we need to do something else? No. Let's, you as a parent, you give 500 rubles to your kid for a lunch. Do you want them to spend them for lunch, or do you want them to buy cigarettes? You don't know. Well, he's not smoking. Well, okay, he can just get the cash and buy cigarettes. He doesn't need to use the card. It can be a teenager, whatever. And they can just get the cash from the ATM and buy cigarettes. And there is a demand for that, and smart contract can ensure traceability, and blockchain and stablecoin technologies might be the technologies that would support that. That is right. But blockchain as AI is just one of the technologies. It can give you a little bit more opportunities, maybe less opportunities. You can resolve the same task with a couple of approaches, as in mathematics. So I'm very cautious of using blockchain everywhere. I'm confident that there are automation tools that can help you achieve these goals. But yes, you are correct. Blockchain and stablecoins, they have the plus, the sides. It's fully transparent. You can see all the transactions and all the wallets. That's true. I think that the desire of the state to control the money emissions, money issuance is natural. The government wants to remain a monopoly here. But I think, conservatism, is like, if you think in a couple of years, there might be no settlements in stablecoins within Russia. It's just hard to imagine that. It will take some time, and there will be some evolution in terms of the approach of the regulators. But if you look at what is being offered today compared to what was the base technologies 4 or 5 years ago, then we would see a major leap forward. So we hear this position, we understand that, we appreciate the stance, but I think it's hard to imagine. Well, let's ask Gunsel. Maybe he will give us some examples of using stablecoin technologies to resolve client tasks. Apart from speed and speeding up the settlements, what else can be delivered by stablecoin?
Thank you, Anatoly. It's been a heated up discussion. I really like that. I am also an adjunct faculty at American University of Sharjah, so I would like to approach from a faculty perspective as well into the topic. So when we look at the financial industry, there are mainly three components: the financial institutions, the investors, retail and institutional, and there are issuers. And when we discuss stable coins, when we discuss digital assets, when we discuss crypto, I think first we need to look at, because all these depend on the blockchain technology, we need to first spot what are the main features of this and why, therefore, we think blockchain brings some value, right? You already mentioned, Anatoly, it's the traceability, right? It's the immutability. It is also important, it's valuable, right? The transactions not being changed. It's the almost instant settlement of transactions, so it's the continuity of the transactions, and it's the security. Despite crypto as a terminology creates question marks in terms of the security, actually it is the cryptography, so that is the most secure among whatever we do in the automated environment right now. So based on these four main features, when we look at these three components, retail jumped into the crypto space with the cryptocurrencies, right? It has been there for 10, 15 years. And there have been road accidents, there have been roller coaster price fluctuations, but it wasn't necessarily a financial instrument. It was more of an investment vehicle for the retail. And the banks were staying away from this instrument. I remember Citibank CEO, JP Morgan CEO, who is already in the job today, Jamie Dimon, were naming, say, likes of Bitcoin as evil at the time, right? Now they are actually very much focused on these. So banks were not necessarily warm about the concept. And on the issuer side, they were not aware, right? There were some issues, but they were more like the hypes of ICOs and NFTs and stuff. Where we are right now, after, because blockchain was initially launched on 2008 with the Bitcoin blockchain. Now it's been 17 years with this technology and evolved through Ethereum and such. I have actually met a number of people, the gurus in this field in Dubai, who already thrown up the towel on blockchain 3, 4, 5 years ago. After expecting so much, tomorrow is the day for blockchain, that tomorrow never arrived, up until very recently. Why I'm saying very recently, I think not only technology, but more so the regulations and institutional adoption has been key. And the Genius Act in America has been the main power behind what is happening today. Because everyone was looking at America, right? If the States is not warm to this, the biggest capital market, it still stays marginal. But now it is opening up with America to the world. So that was a big, big change. So what is happening right now, when I look at these three components of financial institutions, investors, and the issuers, it started with the institutional investors like so BlackRock, Franklin Templeton, as also Herman mentioned, showed up in the session, that they started launching ETFs on Bitcoin, right? So institutionalized the use of...
It's also possible in Russia now, and we already have more than 1.5 billion assets investment into
so it is the institutional step into this asset class. When the institutions step in, these are the buy side, right? Then the banks who are serving them should be interested in this. Because BlackRock's, Franklin Templeton's are the clients of Citigroup, JP Morgan, and others. So they started looking at this, so there must be something in it. And then what has happened last few years, as you also mentioned on the stable coins and international payments, likes of Ripple and a few others stepped in and started eating from the cake of Citi, JP Morgan, and others. And guess what? For these global American banks, the international payments is the basic of their existence.
Yes, JP Morgan.
That's why they are all around the globe, because of this, because of the international payments of the dollar, right? When Ripple and others started coming in and using their own tokens, stable coins, on-ramp, off-ramp, and making these payments much cheaper and much faster, then banks started looking at this. So this is a big push now for this industry coming from the banks, mainly tokenizing their cash deposits and using stable coins. So this adoption will then lead into the settlements, as I mentioned in previously, on the financial rails. This will enable the settlement with the tokenized assets, right? That was the missing piece. An asset tokenized standing there doesn't make sense, right? It is securitization over blockchain. So if it doesn't bring liquidity, what is the purpose of it? Now with the stable coins that can be used as settlement, that is much more efficient and it is enabled for the efficiency. So from the bank side, they stepped in from the international payments point of view to protect their cake. It wasn't innovation from them. It was more protective, preventive step in. From the issuer side, I think this is interesting. For the existing assets, mainly digital assets, I think we may debate whether it is needed or not, but I think it makes it more easy, more efficient for them to do digital issuance, as far as I understand. But for those asset owners sitting on illiquid assets, right, there are a number of them. These are the commodities, these are the real estate, these are, for example, in the Middle East, these are the sukuks that are being issued and illiquid. This is where the issuers' mouth is watered, because they now are able to, they feel they're able to access liquidity. And this is, the whole system is pushed from two sides, as far as I see, and as far as I am involved. One is the stable coins being issued and being used for the international settlements. The other one, the issuers are very much eager to tokenize the assets to access to liquidity. So what is in it for the investors, right? For the investors, the retail, putting aside the Bitcoin and the cryptocurrencies, for the retail investors, they have better access to a wider range of asset classes, right? Previously, a sukuk could only be invested by a $100,000 ticket, now can be accessed by a retail by a $1,000 ticket.
It's also more important than the scenarios of usage is much broader.
Much broader,
than
yes.
Traditional, like repos and all this type
Obviously.
of instrument, pledging this instrument. It's much easier.
That's an
with the
interesting...
smart contracts which exist on blockchain, rather than traditional, you go, you have a paper of contract, which will be executed sometimes in very difficult, let's say, international legal system. It's very, very traditional, let's put it this way.
Once we start here, as you rightly said, now it's not only tokenizing, for example, a sukuk, then you can actually do a repo much easier on that. And then by employing smart contracts, you can actually make it much more efficient from an operational perspective. So interestingly, this semester, I tasked the students with the term project of tokenizing an alternative investment. And one of the projects was on repo on sukuks, using tokenized repo, right? And that was a very interesting one, also coming from the students, because I'm talking about now on the investor space and let's say retail. When I look at the group, including myself, probably I'm one of the oldest, but most of us have kids, and our kids probably are at around teenager ages, right? Teenagers. So demographics was also changing. The way how we did business, the way how we banked before is changing. With the new demographics, I think, we need to talk about these anyway. This is Web3 world that they are born into. They are natives, and they would be looking for these kind of services, right? Now, coming to the banks, and I will complete here my comments. For the banks, I think there is a treasure not yet unearthed. And this treasure is the operational efficiency. Also to your point, Anatoly. Now, banks are trying to protect their cake from the others on the international side. Banks like Sberbank, you already innovative, you stepped into this and you are beyond experimenting. And in a more of a narrow asset class, you actually made it through. But the more you actually apply this, the more with this demographics, this becomes the norm. Because personally, I believe in 10 years' time, or let's say 15 to be on the safe side, we will not be talking about on-chain, off-chain. There'll be one chain, and that would be what we call today on-chain, right? And whatever we do today will be like the cassette player as opposed to Bluetooth or cloud, right? So that today will be history, very short, and this will be the norm. And when banks, they manage to tackle with the legacy systems versus blockchain, so things transition over altogether into this. And when they realize how efficient it becomes for them to manage these systems with the smart contracts, with the AI blended in, powering these smart contracts, I keep giving this example to wherever I speak, and this is interesting now that I'm giving this example. In our team in Russia at Citibank, in the custody team, we had 150 people in the operations, right? 5 people in the front office, 150 people in the operations, for the reasons you mentioned. However we make things efficient, automated, still there are inefficiencies that needs human intervention in the legacy way of doing things. I give this example saying that if we had adopted altogether everything on blockchain and smart contracts, we would have needed maximum 3, 4, 5 people, not 150. Because these people would be making the oversight, obviously with a little bit more people on the technology side to help, but that would be the outcome. So when banks unearthed this hidden treasure, because that would then go directly to their P&L, to their bottom line, as increased profit with the lesser costs. And they would also be accessing broader investor base, broader client base, that would also increase their revenue base. So that's what is not yet identified by the banks globally, but I think Sberbank has done a great job on that.
Okay. Yeah, maybe just a very small blitz question. I'll switch back to Russia. Now, going back to Russia, one sentence as a response. I mean, we are wrapping up our panel discussion. Now, what, from your point of view, is the most promising in terms of the changes of the financial technologies in the next 3 years in Russia? Sergey, what would you put the stakes on? If you had like this 1 ruble, what would you put it on? What would you bet it on? Well, we are in a very regulated area. So if the regulator would open up the tokenization of the Russian shares to offer it to the international communities, I would bet on my money on that, because the tokenization market is very underestimated, and I think that moving it to the international market, it will be great. So yeah, you would bet on the same thing that the regulator bet on. That's good.
Kirill, what about your ruble? I would mention 2 things. First, tokenization. despite all the nuances and little details, I do believe in tokenization, and I do believe that we need to do a lot for tokenization to work, including cross-border. And secondly, I do believe in the marketplace segment and specifically financial marketplaces. I'm talking about financial marketplaces specifically that I believe increase the independence of the client from a financial provider. And this is a good step forward. We hope that financial marketplaces will be evolving even more rapidly, because I think this is a step toward a more open financial market, a market of open data.
Well, I want to make it memorable. I would be investing in the Sberbank shares and asking as a client, when are you going to tokenize your shares? But joke aside, I think as in the opening presentation mentioned, I think AI is a very important one. That most of the investments are going on this. And there is a huge AI washing as well at the same time, right? Anything can be called AI. So on a very selective basis, and I also met a few people who are actually making these decisions. I think AI-powered fintechs, AI-powered solutions by the fintechs, and whichever financial institutions are using these at their most, I think that also would be the best to invest in.
Thank you.
Thank you very much, dear panelists, dear colleagues. The opening of the conference, I think, has been very interesting and productive. We have created a space for discussion, and I really appreciate the hard work that the regulator is doing, Kirill, for the past 18 months or so. I think that there has been a true breakthrough. We used to be working cautiously on the DFA platforms, and just recently, just last week, there is now this law on DFAs, and companies can now register them in their accounting for reducing their debt. This reduces costs in working with debt-related digital assets, and this is a very important element, a very important contribution to the development of this market. This is all joint efforts with you, among others. Yes, I hope when we meet again next year, we will talk about even greater progress, appreciated by our clients as well. Thank you very much.